Welcome back. You're watching Power Breakfast on CNBC TV 18. ICICI Bank, that stock will be on our radar on the back of a good set of third quarter numbers. Abhishek is here with the highlights. Abhishek, the stock was higher by about 5.5% in yesterday's trading session. Do you think the numbers have it in them to take it much higher today?
Good morning, Mangalam. So it is a much better number than Axis Bank has actually reported. So it is one of the best quarters in last 3 years, or let's say last 10 to 12 quarters. The deposit growth momentum has picked up for the bank for the first time in 12 quarters, and it is at the highest growth level. So that has driven the domestic loan growth at close to 14.5%, and retail loan growth was close to 22%, the highest that we have seen over the last 5 to 6 quarters. The slippages or the accretion of bad loans in a particular quarter are at 14-quarter low, while the net interest income growth is the highest in last 15% and crossing the 20% mark for the first time. So you look at the absolute slippage value, that is at 2,091 crore. They are the lowest in last 4 years. However, the non-watch list, non-restructured slippage or the normal slippage of is just at 1,071 crore, which is the lowest in last many years. The net interest margin is at 3.4%, the best in 7 quarters. The domestic net interest margin was at 3.72, while the international NIMs have actually picked up from 0.05 to about 0.77. So the asset quality, if you look at the 7.75 gross NPA, it is the best in last 9 quarters, and the net NPA, on account of strengthening the provision coverage ratio to 76%, has fallen to 2.58 versus 3.65. Look at the stressed asset details. The BB and lower rated book is at 18,800 crores, down about nearly 14% sequentially, and they formed just 3.3% of the book versus 4% in Q2 FY19. So how did the numbers stack up? The NII was up 20.5%, while they made extra provision in this quarter. Their operating profit being really strong, it grew. It was down 2.8% sequentially. Back to you.
All right, then, good set of numbers coming in from ICICI Bank. But on that note, let's hear out the management of ICICI Bank on their provisioning and the recent accusation against Chanda Kochhar in the management's con call.
The gross NPA additions during the quarter were 20.91 billion rupees, in line with our expectation that additions to NPAs in FY 2019 would be significantly lower than FY 2018. Additions to NPA continue to be moderate, though we are closely monitoring the environment. There has been some pickup in resolutions, though the future pace and timing of the same is difficult to predict. April 2019 onwards, we would be witnessing a more normalized provisioning level and profitability.
As far as our understanding is concerned, I mean, whoever has been named will certainly cooperate with CBI. In our understanding, there is neither any allegations nor any material to suggest any fault of any other member or individuals which have been named, and it is really not appropriate for the bank to undertake any further investigations on the matter.
Well, one more stock in focus will be Jubilant Food again, as it reported a very strong quarter yesterday during market hours. It was a beat on all parameters. So, Mangalam, you heard the con call. What were the takeaways?
Well, 3 key takeaways from the conference call of Jubilant Foodworks. The first one is that the 35 new stores that they added, 50% of them were actually splitting the existing stores. So the management said, while this will be a positive in the long term, in the near term, of these 17 stores, the SSSG may be impacted. But the company has 1,200 stores, so this may be a very small niggling worry if you must. The Dunkin' break-even, which was a key positive, was led by higher delivery and premiumization. Management believes that this delivery will continue, and now they're also experimenting with different cuisines. While nothing has been materialized right now, they keep an eye out on Chinese. So that is something we all might hear coming in from Jubilant Food in the very near future, or perhaps sometime soon as well. So this is something we'll keep an eye out on. Brokerages are fairly positive. Macquarie has raised their target price from 1,600 to 1,780 because they believe that incremental margin has come in on account of the new beverage deal that they did from Pepsi as against Coke, and they've increased their earnings estimates as well. Credit Suisse has a neutral rating. While they've increased their target price, they believe that increased aggression from food aggregators is the key to watch out for. So those are a couple of things that the street will be watching out for. But on that note, actually, what we do is let's hear out what the management had to say in the conference call itself.
I'm happy to state that we have opened 35 stores in Q3. More than 50% of our new stores have been opened in the existing areas where we have split the existing stores. We believe this will improve customer service to our customers in the existing markets, improve efficiency in the long run, but also we believe in the short run this will put pressure on the same store sales growth. We had a strong same store growth in Dunkin', strong top line growth, driven by the core portfolio of donuts and of beverages. Premiumization is something we drove both in the donuts portfolio as also on the food side. That has helped us drive realization. Accompanied by a very, very healthy increase in delivery in Dunkin', we realized that the brand strength that we have wasn't being fully leveraged given our footprint, and we used therefore delivery to drive growth. So that delivery channel growth also has helped us. So all of these have led to Dunkin' breaking even in Q3. I think it would be fair to say that this is only the first milestone. We were loss-making, and this was the first port of call for us to break even, which we've achieved now. We intend to watch the business closely before we take a call on expansion or the pace thereof.
Well, let's move on to earnings due today, and we have Reema Tendulkar here to tell us what to expect from Bharti Airtel. Hi Reema, good morning.
Hi, good morning. Well, numbers should be out post-market as we are expecting a muted quarter. So on a consolidated basis, there is a possibility Bharti Airtel could report a loss. The expectations are that it could be a loss to the tune of about 1,000 crore. In fact, we were expecting a loss in the prior quarter as well, but the company had a deferred tax write-back, because of which it was saved the blushes. On the top line, revenues will be seen flat, while the consolidated margins could come down by 50 basis points on account of the pressure seen in the India wireless business. So coming to the India piece of the puzzle, where revenues, according to our poll, are down close to about 1.5%, tie that in with Jio, which reported a 12.4% increase in their sequential revenues in the quarter gone by. Margin pressure should continue for Bharti's India business for yet another quarter. Bear in mind, Bharti's India margins have actually halved. It was trading at about 40% plus prior to Jio's entry, and now this quarter we're expecting a 20% figure at the India margin level. The key to track will be the average revenue per user, or ARPU, because there is a possibility that after many, many quarters, the ARPU, which has been steadily declining, could actually show some improvement. And the key reason is the fact that the management had introduced this minimum prepaid pack of 35 rupees per month, which means effectively per month you have to pay out close to about 100 rupees. So that could put a balm on the declining average revenue per user that we've seen in the last few quarters. So this quarter, ARPU could improve sequentially, and that will be a key highlight. On the Africa side, the company has been performing well. So our poll throws up a 3% improvement in the revenues. Margin should be unchanged at 37%. The key to track will be debt deleveraging plans. Today, you had Qatar Investment Authority announcing that they will be investing $200 million as a pre-IPO investment into Africa business. So debt deleveraging will be tracked closely. Back to you.
Absolutely, Reema. Thanks a lot for that. So ARPU is likely to improve sequentially, and debt deleveraging in the Africa business will be important as well. But let's move on to the two-wheeler space then. Hero MotoCorp the performance is expected to be weak due to weak demand. Sonia, tell us what the street is watching out for. The results for Bajaj Auto on the margin front weren't very good.
Yes, in fact, after Bajaj Auto's weak performance, the expectation is that even Hero MotoCorp could be under pressure. Remember, the entire sector is undergoing a slowdown because of higher ownership costs on account of the higher insurance, higher fuel costs, etc. And that has really dampened demand quite a bit. For Hero MotoCorp, it will be the second consecutive quarter of a single-digit volume growth. This time around, the volumes have grown just 5% year-on-year compared to a 5.5% year-on-year growth that we saw in the last quarter. Now, this compares to an average of 15 to 20% growth that we've seen in the preceding 15 quarters. So really, this slowdown is sort of quite deep, as we're seeing it in the second consecutive quarter. All of this will have an impact on the margins as well. We're expecting the margins for the company to decline 50 basis points quarter-on-quarter and 160 basis points year-on-year because of higher launch-related expenses that they incurred, higher discounts. Discounts were at record highs, raw material costs have been higher, and also expiry of the tax benefits at the Haridwar plant. All of this will have an impact on realizations too. Realizations are expected to rise just 0.9%, so largely flat on a sequential basis. Now, you know, the other big issue is the market share loss in the scooter space that they've seen year to date, and that is something that we'll wait for the management to talk about in the press conference as well. But all in all, weak set of numbers. I think a lot of it is in the price. The stock is down 30% in the last 12 months. In the month of January alone, the stock has lost almost about 15-odd%. Back to you.
Absolutely, Sonia. Thanks a lot for that. So that is something we'll keep an eye out on. But Abhishek's been waiting with us patiently. Abhishek, tell us what the street is expecting from Indiabulls Housing Finance.
It may be a weak quarter for Indiabulls Housing Finance given the fact that liquidity crisis has had its negative impact on the housing finance sector. So the disbursement and AUM growth is expected to come down. AUM growth can be in the region of 15 to 20%, unlike 30% average that we have seen over the last 2 to 3 years. The spreads can decline. Remember that last quarter the spreads were at 3.24% on account of the lower growth and the rise in cost of funds for HFCs that we have seen. So asset quality is largely to remain stable. Below 0.9% gross NPA will be positive. Last quarter the gross NPA was at 0.77%. So our poll on a sequential basis, that is quarter on quarter, the NII is expected to come down by 12.8%, while the net profit can decline by 8.8% to about 944 crores. Back to you.
All right, Abhishek, a weak quarter is expected. We'll watch out for that. But